Okay, so today's the 10th of January, and believe it or not, I called the daily high today. If we take our fib from here to here, we get this alignment with this right here, and that's about 20 points from the daily high. And first of all, I'll go over my trades for today. So I had 2 trades today. One was stopped out at break even, and one was a loss. So I had good intentions with this one. 853 I bought right there. And I should have sold right there, which was 20 points, or right there, which was 20 points. But I was greedy and I wanted 30 points, 40 points, 50 points. If I'm holding for a AM session, I'm most likely not going to get, the whole daily range, right? So 20, 30, 40 point scalps are what I'm looking for, not 100 point scalps. So I stopped this at break even because I was like, yeah, we're probably, if we enter in this fair value gap, either we're going to consolidate, and I just had a bad entry now. Because if I had an entry there, I would have gotten at 36, and above these highs would have been 30 points. So I would have sold. And my stop could have been lower here, And then I told myself, I'm not going to trade again. But I wrote down that I had the urge to trade. And I did. After this trade, I kept wanting to get in. And this is what I wrote at 653. And let's see where that is. $6.53, which is right here. This up close candle right there into this fair value gap. I just took a trade and stopped that at break even. I feel like going into another trade, but I'm not going to. I will just journal what I think will happen and then look back on it later in the day. So if price goes below the 9, let's see on the 15-minute chart. If price goes below the 9 a.m. right here, in the 1:45 a.m. lows right here, relative equal lows, while ES stays, where does ES stay? In the 4 a.m. 15-minute fair value gap, then I will buy price when that happens. And right after I said that, 10 minutes later, price does drop below that. And what does ES do? In that 15-minute gap that I have outlined, which is this gap, at 10:05 it happened on NASDAQ. 10:05 right here. There's 2 reapers that ES went into. So a reaper forms on a breaker. First breaker right here. Low, high, lower low, higher high. Reaper right there in the 15-minute. Then another one. Low, high, lower low, higher high. Then a reaper right there. And look at where ES goes. ES 10:05 goes into the midpoint of this reaper, while going into this reaper, staying in this reaper, coming out, wicking in that, not closing into it, shows you where volume was going to want to go, and then going higher. And my target for the week was, as you watched in the other videos, my targets for the week was this fair value gap, this weekly opening right here, which is also the top of this fair value gap, this weekly open right here, and the top of this, and this right here. So I called the low right there, and it went up all the way to my projected target, which was there, and with this confluence on the Fibonacci right there. So what went wrong? You know? What went wrong is I got greedy in the morning, because from here, 53 to the top, to 53 to where it came right here, 53 to 69. $53 to $69, that's 17 points. Or 53 to 66, that's 13 points in one candle, you know? Or I could have waited and I could have just sold when it gets above here. Right there, which is at 73. So I could have 20 points right there. And because that was such a quick entry and a late entry, because I was in premium, I should have sold early, right? And after that, there was many opportunities to get in. There's many opportunities to get in. We take out the relative equal lows, and ES stays calm. Right there. So that's opportunity number one. Say you don't want to take that. Then I said I'm gonna wait for it to meander around this consequent encroachment, which is a 4 hour. I'm gonna take this off. This is also a reaper. This, I'm gonna change the color though. Or do that. So this is a reaper. This is the consequent encroachment of the 4 hour. This is the consequence, or I'll just take off that realistically. And look at that, 940. I could have seen that inverse fair value gap, and it played right into an inverse fair value gap, into a bearish order block, and taking out liquidity and going into an inefficiency. So that's a prime short for this, and that's what I was expecting. And while that was happening, ES was running up, and it only went down back into the reaper. So that's SMT divergence right there. Lower highs, or higher lows, and lower lows. But bias is bullish, so you're buying that turtle soup. So actually, let's look at another 1 minute setup. As soon as this happens, intermediate high right there. As soon as it breaks below that, you're buying that fair value gap right there. And on the 15-second chart, there's a fair value gap right there. Then boom, you're looking for this low. So from there, 52 to 10, 40 points. If you don't want to buy there, you can buy here at the consequent encroachment of that. Boom. 36 to 10, 26 points right there. So that's already 2 setups that happen in 20 minutes. And the third right here, 3 setups. And say you don't want to buy here, you wait for a short-term high to be taken out of here and here. And this is the Asian range gap. So boom, right there, that's another buy. Oh, you want to wait for another one? Boom, that's a buy right there. Boom, you buy that. 56 to 74, that's another 20 points right there. Then you have this reaper right here. This purple reaper, and that dotted line is the 4 hour consequent encroachment. So what can you do? Now, if you don't want to get in there, you wait for the 4-hour consequent encroachment to look. Look on both screens. What do we have here again? Lower, higher lows right here. Lower lows. What is this? A breaker. Low, high, lower low, higher high. Breaker, fair value gap, inverse fair value gap. What more could you want? That's another buy right there. And while that's happening, look at that. While that's happening right there, you have this right here. And before that, you have this touch right here on the 4-hour candle. Or you can wait for it to go here, make relative equal highs right there, drop into fair value gap, boom. You know, your stop's going to be anywhere below this, like these order blocks, I'd say. And boom, maybe you got stopped out there. But, so look, lower highs, breaker right there. So you can buy this right there. That's price supporting. And then this is where my second mishap was. Where I know the reason why I took it. The reason why I took it was because I needed to make a concrete rule, which is that it's only one trade a day. Right now, it's only one trade a day. Only one trade a day. Doesn't matter if I got stopped out. Doesn't matter if I'm at a loss. It doesn't matter if I'm green. One trade a day. And like given like the 5 really good examples I just gave, I don't know why I entered here. So what I was waiting for was, this is a bearish breaker, high, low, higher high, lower low, and this is a reaper right there. So I wanted price to be inverse on this reaper. I'll end it here. I wanted price to be inverse, but it didn't quite break about that. So my entry should have been here, not here. So I bought that, and then I got stopped out 13 points, which is right here. Okay, but that wasn't, I was rushing. So the real entry was this. Break above this reaper, break above it, make a fair value gap, inverse fair value gap, and order blocks. Boom, that's another buy right there, 910. To there, that's 22 points again. And it finally hits the target of the day. Comes back, touches this order block to the pip right here. Doesn't close below this mean threshold of this. And now we're perfectly primed up for the news tomorrow, 5:30. And my prediction is it's going to shoot right up. So that was today in a nutshell. I mean, an overwhelming amount of setups. And I'll be right back. Give me 1 minute. Okay. So here's what's going to happen for the future. Let me just show you what I did today. And let me just show you the amount of money that can be made just by math. So right now, this is my plan. This is week 2 because I didn't trade at all last week. And now I'm down 13 points. So, and I didn't get points last week, so I need 80 plus 13, 93 points for this week. Technically. But for the first month, which is January, all I need is 40 points a week. That's all I need. I can be taken in one trade, so I can just focus on one trade a week. I can take that in 2 20-point trades, or I can take that in like 3 trades, you know? Same with month 2, 56 points. So I can do that most likely in 2 trades. Whoops. Then month 3, 70 points. So most likely 2 or 3. Then month 4, which would be down in 3 to 4 trades. Preferably aiming for like 20 handles consistently every morning, or a couple times a week at least. So it's not that much, especially month 1 and month 2. And then that will be January, March, April, February, March, April. So in May, I'll have tripled this account, which is paper trading. Then in May, I can go to the account I have with Mama. That's also $1,000. I can do the same thing again. So May, June, July, August. So now I brought that account back to 3,000. And we're in the beginning of September. Then I do 21. So that one is 32% gain. Then I do 21.25% monthly gain with my 10K account because I have $10,000. And in a year of continuously growing my account with around 88 points, with around 90 points a week, 3 micros, 4 micros, 4, 5, 6, 8, 9, 11, 13, 16, 20, 24 contracts. That's how much I'm going to get to, which is really 2 contracts, 1 contract and a half, you know. Max stop 20 points, risking 1% of the account, risking 2% here. And then with a 100K account over like 1 year, total withdrawal in 1 year would be $200,000, and my balance would be at 164K. With 75% withdrawal at 17% monthly, right? And I would be getting 70 points, 75, 80, 60, 65, 75 points a week at 3 mini contracts, 4 mini contracts, 5 mini contracts, with around like 16 to 15 to 18 points stop. Right? So here's the plan. I mean, I'm just gonna go show you how many videos that I need to watch for ICT. Or I think if I click on him, 571 videos. And I've watched 130, 134, 134, 154. About 180 videos I've watched. I've watched around 180 videos. And he has 570. So that means I have close to 400 videos left to watch. And that is honestly unimaginable to me because I feel like the information I have now is sufficient for the rest of my life. And that's the whole point. Right now, I do have enough information to prosper forever in trading, which is why I can't. There should be no expectation for something new. I have everything I need, right? Like today, like this week, I projected the week. I've been projecting each day. Today I projected the low and the high. And I saw, let's just count it again. 9:30. 1 setup, 2 setup, 3 setup, 4 setup, 5 setup, 6 setups. 6 good setups that are all easy scalps. And realistically, I only need around 2. Look, that's a 50-point move. I need just that once a week. And I'm beyond rich. I need just this once a week. And I'm beyond rich. And look at the range. Look how much happens in a week. And all I need is this in a week. And I am beyond rich. And I already have everything I need to know for me to be able to do that. But that's not my purpose with trading. I don't want to stop here. Which is why I'm going to go. I'm going to watch all of these videos. I'm going to backtest, right? I'm going to learn how to trade. I'm going to learn myself. You know, and that's the process. And I'm loving it. So with backtesting, what is my goal with backtesting, really? Well, for the past month or so, I've delineated the New York session. I'm going to go in and do the Asian range as well. My goal with backtesting as of right now is to find something that repeats every single day in the New York session. And the ICT's already told me what happens every single day. Every single day. Every single day. Opposing liquidity gets ran. Relative equal lows. And then an opposite run takes place. It's that simple. Or you have, look, opposing liquidity takes out right there. And what else? Where else are you going right there? Boom, right there. There's so much precision in this. The rabbit hole is endless. Right? It's endless. So I guess this is what we're going to start with. I'll be right back. Excuse me for that. But honestly, I think this is what I'm going to do right now. Whatever. I wonder if we hit equilibrium here. Oh, yes. Okay. Now we're talking. Wow. Wow. Okay. So let me tell you what I wrote down today. When we are looking at ranges, we incorporate the wicks. When looking for optimal trade entry and price projections, we use the body of the candle. So this is a range right here. So this is the range equilibrium. At the same time, I realized I should do this. This is the range equilibrium. Here. And I'm not going to delineate that, but I will mark this up as so weekly. We drop below the range equilibrium. We go into the mean threshold of the weekly fair value gap. Okay. High, low, higher, high, lower, low. This right here is a big bearish order block. Let's go to the 4 hours. Sell side there. Okay, I'm trying to figure out the best way to approach this. And I think we'll do week by week. So we start here. Okay. I'm also going to go implement the Asian ranges. Wow, okay. Yeah. Okay, so I'm back. And we just finished. Kind of outlining the opening, the day's opening. And this is what I'm going to do right now. Wow, okay. I hope this is still going and good. Because this is amazing now. Oh, come on. I want to see how this looks. Alright, I guess that will do for right now because I'll just put my camera up there too. So you can see me now. And these are not aligned. And now they are. Let me see how that looks. So I hope it'll be good quality. But if not, we'll have to work with it anyways. Okay. Let me see, my camera's good. Alright. So this one's gonna be yes. This one's gonna be okay. So we're gonna look at price action on the weekly. So Monday, Tuesday, Wednesday. I need to delineate this. I forgot. All right. So we're going to do it weekly. First week is going to be this up week right here. Or no, this one, really. So Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. So first we're going to have to run some projections. Yeah, so from what I just did right there, nothing really makes this high pop out. Or or on ES, this high pop out. But I'm just annoyed by this, so give me a quick second. Okay, gosh. So Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Pretty indecisive week, but we still closed 100 points above. Then we got Tuesday, Wednesday, Thursday, Friday. We got Monday, Tuesday, Wednesday, Thursday, Friday. Then we got Monday, Tuesday, Wednesday, Thursday. So big red week. And then 2 pretty indecisive weeks right here. So we could do 15-minute and go back to the first day. Outline highs. The red is going to be for highs and lows. So we got relative equal highs here on Friday. We got a low here from Thursday that went into here. So looking at this right here, I see optimal trade entry. Right there. And I guess that's kind of where we get our top over here. Let's look on the 1 hour. Oh gosh. Yep. So this right here projected that high. Do you see that? Now that's absolutely crazy. I don't even know what to say, honestly. Wow. When to go here? And this did as well. Look at that high right there. And just that right there. And I honestly think I'm going to stop the stream right there. And we'll continue this tomorrow.